Welcome to the Deep Dive, your direct line to the most critical insights from the latest earnings calls. Today, we're taking a deep dive into the second quarter fiscal 2025 earnings call for, well, a truly iconic global apparel giant. And this isn't just a basic summary. We're going to unpack the strategic shifts that are really moving the needle here.
Right.
We'll dig into the financial performance and, importantly, explore what it all means for the competitive landscape and, your understanding of where market trends are headed.
Yeah, we've just finished going through their Q2 results, and look, it's strikingly clear. This company didn't just meet expectations.
Sure.
They blew past them.
Yeah.
Sales, margins, earnings per share. A standout performance, really.
Absolutely. And what really jumped out at me is this isn't like a one-off thing.
No, definitely not.
We're looking at their third consecutive quarter of strong growth. Organic net revenue climbed, 9%?
9%, yeah, impressive.
And their direct-to-consumer channels, their own stores, their website sales, their search, 10%.
Right. And get this. That marks their 13th consecutive quarter of positive comparable sales growth.
13. Wow.
Yeah, clearly demonstrating strong and increasing profitability in that DTC space.
It's powerful. But it wasn't just DTC doing all the heavy lifting, right?
Not at all. Their wholesale business, which, let's face it, can be tough for a lot of brands, also delivered solid growth, up 7%.
That's also the third straight quarter for wholesale expansion, too, with better margins.
Exactly. And geographically, international markets surged 10%. Europe was particularly outstanding.
Okay.
While the U.S. business kept up its momentum, growing a solid 7%. This kind of, broad-based growth across channels, across regions, it's a really clear sign of fundamental health.
Yeah, the strength truly was broad-based across categories, too, which I found fascinating. Women's lines grew a remarkable 14%.
14% in women's, yeah. Men's up 6%.
And key focus areas like tops, which they've been talking about, up 16%. Bottoms up 8%.
I mean, that level of performance, pretty much across the board, has clearly given them a lot of confidence.
Oh, definitely. They actually raised their full-year top and bottom line outlook. That's a bold move in today's market.
It is. And the financials really back it up. Gross margin, the profit on each sale, before overheads hit a record, 62.6%.
A record. Wow, that's an expansion of 140 basis points year over year.
Yeah. So for anyone listening, a basis point is just 0.01%. So 1.4% improvement there. Pretty significant.
Huge. And adjusted diluted EPS earnings per share was up a massive 37% to 22 cents.
These aren't just isolated gains, though. They really reflect consistent execution on their strategic priorities.
Okay, so let's unpack this because those numbers don't just appear out of thin air. The company's clearly undergoing a big strategic transformation, multiple parts to it.
Right.
First off, they're accelerating what they call their DTC-first shift. What does that actually mean in practice for them and for, the consumer?
Well, it means their own channels, their stores, their website now represent over half of their entire business.
Over half. Okay.
And it's not just about growing sales volume. It's about delivering consistent, healthy, comparable sales, but with significantly improving profitability.
Right.
Think about it like this. Instead of just, pushing products through other retailers, they're intensely focused on controlling that customer experience.
Understanding what you, the consumer, actually want.
Exactly. And delivering that experience flawlessly, especially in their own stores and online. It's a very disciplined, consumer-led pivot towards, retail excellence.
And it seems they're moving well beyond just denim now, which is obviously what they're famous for. They're evolving into what they describe as a full lifestyle brand. How are they pulling that off without, diluting that iconic denim heritage?
That's the key question, right? While they're absolutely maintaining dominance in jeans, they're driving really outsized growth in related lifestyle categories.
Like tops, dresses.
Tops, dresses, outerwear, non-denim bottoms, yeah. And this involves disciplined assortment expansion. So carefully choosing what new products to add, but also SKU rationalization, which is basically
simplifying things,
Yeah.
cutting out the stuff that doesn't sell as well.
Exactly. Cutting the less productive styles. This whole approach to bringing in newness is leading to stronger productivity per item and, crucially, higher full-price sell-through.
Meaning fewer discounts needed.
Precisely. Less reliance on promotions.
That disciplined approach also extends to narrowing their focus, doesn't it? I mean, the announced sale of Dockers, and they previously exited Denizen and footwear.
Powerful examples, yeah.
What does this deliberate distortion of focus, as they put it, truly achieve for them?
Well, it's really a strategic optimization. They're not just selling off assets randomly.
Right.
They're strategically reinvesting that energy, that capital, that management attention back into their core brand.
Doubling down on the main thing.
Exactly. Concentrating their efforts where they have the strongest competitive advantage and brand equity instead of spreading themselves too thin.
Yeah.
It streamlines operations and lets them really dominate their chosen segments.
And all of this is underpinned by what they call operating with rigor and excellence. Sounds good, but how are they actually achieving that? Especially with, complex global supply chains and retail.
It means their ability to execute has sharpened significantly. They've essentially gotten much, much better at the fundamentals.
Like getting products to market faster.
Yeah, speeding up go-to-market strategies, streamlining store operations, finding end-to-end supply chain efficiencies.
Okay.
Key initiatives include reducing the time from design to shelf, introducing these agility tracks for quick-turn products like tops.
So they can react to trends faster.
Much faster. Plus, increasing globally directed assortments, that's over 30%, now, and again, reducing those non-productive SKUs. It's all about moving faster and being more efficient.
Speaking of brand, it clearly continues to resonate globally, growing 9% overall. Their unaided brand awareness, consideration still best in class, and scores are significantly up year over year in core markets.
Yeah, and it feels like they're really reinvesting heavily in global marketing too.
Definitely. What are some of the standout campaigns that seem to be hitting home?
Well, that investment includes really high-profile stuff, like the Reimagine campaign with Beyonce.
Right, the limited edition drop, the tour looks.
Exactly. And they're also deeply engaged in music culture, showing up at major festivals, Stagecoach, Coachella, Primavera Sound.
Meeting consumers where they are, creating that cultural connection.
That's the idea.
And their collaborations are really driving brand heat, aren't they? The Sockeye collection, that recent Nike partnership.
Absolutely. Creating premium sales opportunities and just a lot of buzz.
It feels very strategic, elevating the image.
Totally. And the product evolution itself is gaining momentum. They're striking that balance between their authentic denim roots and bringing in compelling newness.
Like the loose and baggy fits. Everyone's talking about those 90s and Y2K trends.
Oh, yeah. The baggy dad George shorts, seeing accelerated demand there.
Yeah.
Clearly tapping into that trend.
They've also expanded their lightweight offerings, like that linen plus denim collection. Smart move for year-round comfort.
It is. But what's particularly interesting is this emerging trend they highlighted. Quiet Western.
Quiet Western. Okay, what does that mean exactly?
It's like a subtle evolution of the full-on Western theme. Think less rhinestone cowboy.
Okay, gotcha.
And more understated, authentic Americana. Consumers pairing classic bootcut or flare jeans with like simple rib tanks or textured knits. It's a more sophisticated take.
And it plays right into their denim lifestyle aesthetic.
Exactly. They called it a natural place for us to lead.
And their tops business, they reset that last year. Brought in new talent and capabilities. Grew an impressive 16% this quarter.
16%, with acceleration across genders and channels too.
It really confirms they are now fully in the tops business, as they put it.
Definitely. So moving to the operational side, that global DTC performance up 10%, solid positive comps.
What drove that? Just more people coming in?
It was a mix. Increased store traffic, yes, but also better conversion rates, so more visitors actually buying something. And higher average unit retail, AURs, across all geographic segments. Basically, customers are coming in, buying more often, and spending more per item. Host, speaker, speaker.
And financially, that's paying off big time. DTC margins improving meaningfully, up about 300 basis points in Q2 and 400 basis points year to date.
Yeah, and what's really noteworthy, their e-commerce business, which grew 13%.
Is now profitable. That's huge in today's online world.
That is a significant milestone, absolutely. And the physical store network also expanded, 16 net new doors this quarter, showcasing that enhanced denim lifestyle offer.
And they think they can double their mainline store count in the U.S. over time.
That's what they indicated. Shows a strong belief in physical retail complementing that digital growth. It's not just online. They see a big path for brick and mortar too.
And their loyalty program, nearly 40 million members worldwide now.
Yeah, continuing to expand.
Yeah.
And driving more frequent purchases at higher AURs.
So it shows that connection through data and analytics is working. It's not just about discounts.
No, it's about understanding and responding to their most engaged customers.
Right.
Okay, shifting gears slightly portfolio, regional highlights. International business grew a strong 10%.
Led by really strong growth in Europe, up 15%. The brand's strength and relevance there, especially with younger shoppers in fashion-forward cities like Paris, Barcelona, Milan, it's extremely high.
It's about cultural relevance, not just selling jeans.
Precisely.
And Beyond Yoga, part of their portfolio, saw a healthy 12% increase. DTC there up even more, 31%.
Yeah, impressive growth for Beyond Yoga. And they're expanding its physical footprint, too. First East Coast location opened, 6 more stores planned this year. Smart diversification.
And in the Americas.
Net revenues up 9%, operating margin up 270 basis points. U.S. business grew 7%, and Latin America surged 18%. Mexico saw double-digit growth. So strength across diverse markets there, too.
Now, Asia's net revenues were flat, which, might raise an eyebrow at first glance.
Right, but they explained this was actually due to proactive moves aimed at improving the structural economics there.
Like reducing sales to less profitable partners in India? Exactly, and rationalizing franchisee bases. So while the top line was flat, it seems like a deliberate move towards a healthier, more profitable business in Asia long term.
Okay, makes sense.
And from a financial discipline perspective, that record gross margin we mentioned, primarily driven by lower product costs, and that favorable channel mix selling more through their own higher margin channels.
Plus higher full price sales, lower promotion.
Right. And management was quite clear. They are not done yet with gross margin expansion, implying more upside to come.
Okay. And SG&A, selling general admin cost.
Showed a 50 basis point rate improvement, basically leveraging those higher sales effectively. Now, distribution expenses did increase temporarily.
Right, the new European distribution center ramped up.
That and parallel U.S. operations. But the goal of that network transformation is better service levels and optimized costs down the line. So a temporary investment for future gains.
Got it.
And strong EBIT growth earnings before interest and taxes was a key driver of that impressive EPS delivery.
They generated, $146 million in free cash flow?
$146 million. And delivered an 18% return on invested capital. Plus, they declared an 8% dividend increase, showing confidence.
And plan to return at least $100 million from the Dockers sale proceeds via share buybacks.
Right. Returning capital to shareholders.
Now, inventory levels increased 15%. Sounds like a lot.
It does, but they noted it was partly to support holiday sales and partly a proactive measure against uncertain tariff impacts and those Red Sea disruptions.
Okay, so strategic stocking.
Yeah, and they expect inventories to align with revenue growth by year end. Suggests they're managing it.
Speaking of tariffs, that's obviously a big uncertainty. How are they navigating that?
It's a key focus. Their guidance actually incorporates assumptions for additional tariffs, 30% on China goods to the U.S., 10% on other U.S. imports.
Wow, okay.
They estimate a net 20 basis point headwind to full-year gross margin and maybe a 2-3 cent impact to EPS, but that's after their mitigation strategies.
Like optimizing promotions, pricing, vendor negotiations.
Exactly. Supply chain diversification, too. They believe, and this is a strong statement, that they are better positioned than most to manage through this uncertainty.
Okay. So all this solid performance, these strategic pivots working, confidence in managing tariffs, it all led to them raising their full-year guidance.
Yep. Organic net revenue growth now expected to be 4.5% to 5.5%.
And adjusted diluted EPS raised to between $1.25 and $1.30.
Right. Full-year gross margin expectation up 80 basis points now. EBIT margin expansion projected at 70 to 90 basis points.
And the outlook for Q3?
They're projecting organic net revenue growth of 4% to 5%, adjusted diluted EPS between 28 to 30 cents. They did acknowledge a temporary shift in marketing expenses and distribution costs affecting that specific quarter.
But the overall message is clear.
Very clear. The transformation to a more profitable DTC-first denim lifestyle retailer is working. It's positioning them for a mid-single-digit organic growth annually, and they have a clear roadmap to hit 15% operating margins over time.
15%. That's a serious long-term target.
It really is.
So let's zoom out a bit and put this into investor context. Despite this huge DTC-first focus, Wholesale actually accelerated significantly this quarter.
Yeah, that was interesting. They seemed cautiously optimistic, raising their full-year outlook for Wholesale to be flat to maybe slightly positive.
Driven by strong order books and partners liking the broader assortment.
Exactly. It speaks to a balanced approach, not just abandoning traditional retail.
And they're holding on to market share.
Maintaining their global top spot, #1 in the U.S. for both men's and women's denim, shows remarkable competitive strength, even in this tough global environment. They're not just surviving, they're holding ground and growing.
And the power of those AURs, average unit retail, is clearly at play here. Revenue growth driven, what, 2/3 by volume, 1/3 by higher AURs?
That's the breakdown. And that AUR growth is broad-based geographies, channels, categories.
Which tells you consumers are responding to the new higher value products and the reduced promotions. It's not just price hikes.
Right. They're buying into the brand and the new stuff at full price.
And the sustained improvement in DTC margins, the focus on higher margin categories like women's, international, it all suggests a continued path for overall margin expansion.
Yeah, and management's sounding confident they're not at peak gross margins yet. More room to grow profitability.
And finally, capital allocation. Increased dividend, planned buybacks from the Dockers sale.
Highlights a commitment to shareholder returns alongside reinvesting in that strategic growth. It looks like a healthy, balanced financial strategy.
All right, let's shift to our This Is Not Financial Advice segment. If you're looking for where maybe, just maybe, the next bit of alpha might be hiding in this earnings call, let's consider a highly concentrated, maybe somewhat contrarian play.
Okay, I'll listen.
A targeted long position on the global proliferation of the quiet Western aesthetic, specifically within their DTC and premium wholesale channels.
Interesting. So not the big baggy trend everyone's focused on.
Well, that's significant, sure, but the potential hidden gem here could be the subtle, elevated, quiet Western style. You know, classic bootcut, flare jeans, paired with those heritage-inspired knits, not the overt stuff.
Right. And the company explicitly called it out as a natural place for us to lead. Given their heritage and where the product's going, they're uniquely positioned to own that look.
And the data points sort of back it up, potentially. Europe's exceptional 15% growth, where the brand's hitting home with fashion-forward young shoppers, plus those successful premium collaborations like Sacai and Nike, it indicates an appetite for that elevated, nuanced style.
And they're introducing newness like that thermoregulating 501, which fits the whole elevated year-round comfort theme.
Exactly. So the theoretical trade involves identifying and allocating capital to the specific product categories and regional expansions, especially Europe, premium U.S. accounts that are leaning hardest into this quiet Western vibe, and the diversified premium assortment.
So the bet is on its long tail, basically, and higher AUR potential as a durable lifestyle trend, not just a seasonal flash in the pan.
That's the idea. It's subtle, it's authentic, plays right into their strengths. Again, just a thought experiment, not financial advice.
Understood.
Okay, so to recap everything, this quarter really demonstrates clear evidence that this company's strategic agenda is gaining significant traction.
Yeah, translating directly into strong financial results and that confidently raised full-year outlook.
The transformation to a profitable DTC-first denim lifestyle retailer is well underway.
Setting the stage for sustained mid-single-digit organic growth and that clear path to significantly higher operating margins down the road.
We've unpacked the drivers behind their success, the strategic pivots they're making,
And how they're navigating global challenges like tariffs, really from a position of remarkable strength, it seems.
So as you process all this information, think about their journey. We invite you to consider, what aspect of this strategic transformation do you find most compelling for the company's long-term trajectory?
Yeah, well, what's the one thing that you think will truly define their future? Something to mull over.